Hey, happy Thursday, everybody. How we doing out there? You guys doing a good day or having a good day? Welcome to the Closing Beat. We are financial advisors here at Jazz Wealth, and I made a small mistake. Today is my wife's birthday. It also happens to coincide with Wine and Wealth. So which one do you think won in terms of where I'm going to be devoting my time tonight? No Wine and Wealth. It is the wife's birthday. And it's funny how when you're younger, you're like, what do you want to do for your birthday? Oh, man, I want like some cool dinner or something. I said, what do you want to do for your birthday? And she's like, pizza. That's all she cares about, man. So we'll be celebrating that tonight, and got a super special birthday coming up here this weekend that we'll be both celebrating our birthdays. Total secret. Cody had a good way of saying it. It's a reverse surprise birthday. I like that. So we know what it is, but the people coming don't know what's going on. So it's going to be unique and special, and I don't think anybody has too much of a clue. Anyways, so no Wine and Wealth for the Mrs. birthday there. And be on the lookout, if you would, on Instagram. There's another Jazz Wealth, Jazz.wealth, but that's not us. They have more followers than us. It's just an automated thing that somebody set up, and we reported it to Instagram. They could really care less, but that's what it is. Also, below, bottom right of your screen there, you can see our FinTips videos for this week. We got some really cool ones that have come up, and they all spawn from questions. So although we can't respond to your comments legally without getting in trouble, I do see the questions, and often that makes me think, yeah, maybe I took that for granted. Maybe that's a video we should talk about. We've also got some really cool ones coming up. Our goal is to get even more detailed, to share that with you, teach you how things work, because we're financial advisors. Yes, we hope you check us out, jazzwealth.com, all that sales pitch stuff. But at the end of the day, we like to teach, so we'll be doing that. And by the way, this is getting me some cool stuff, right? So it's a little fake henna tattoo thing. And I go places, and it's like, I'm at the gas station. There's a bunch of people in line. I'm like, oh, sorry. I got to get in front of you there. Sorry. And everybody's like, oh, that's pretty cool. I go look for a shirt the other night. And I'm like, hey, do you guys have any white button-down shirts I could get? And the lady's like, oh, sorry. Yes, come on over. That's pretty cool. I'm just kidding there. Let's talk about the market. You've been watching the market. I watched it all day. I watch it every day. And also, what's interesting about today, it's kind of what happened yesterday, right? So we talked about yesterday, morning volatility, afternoon calm, right? That's how summertime markets go. So today we saw a little morning volatility. It was a little more actionable than the afternoon, but then the afternoon came along and it was like, we were just going higher, right? Just steady higher there. So we really have kind of started to get into this summertime season here. I don't know that continues, but for the moment, that's where we stand. And also the title of today was The Stock Market Officially Digests All the Bad News, because the news wasn't great today. The news wasn't great overnight. The news has not been great for a while, but the markets have been moving lower on any hint of any kind of bad news. Today was, and yesterday as well, was one of the first times we saw not the greatest of news out there, but the market's like, you know what, we've already priced that in. So it kind of had that attitude here today, and I wanted to point those two things out, that it does seem like pullbacks would be viable at this point. Not that they won't happen. There will be pullbacks. And it does also seem like we're going into that summertime. You better get all your action done in the morning because the afternoons are going to be a bit of a snoozer. And so that happens. The initial headlines here today, the job creation numbers there, pretty weak. It doesn't really bode well for the jobs number that's coming out tomorrow. Remember, we expect the unemployment rate to drop to 3.5%, which is fine. It's maximum employment, full employment, however you want to say it there. The initial jobless claims came back down to 200,000. That's the lowest I've seen them, right? I mean, in my lifetime, you'd have to be, in your 60s to have seen lower. You got to go back to 1960s to actually have the initial jobless claims at this kind of a low level here. So one thing I want to point out, though, here's a little bit of a lesson. You will see they call it seasonal, right? So they'll say seasonal effective jobs rates and all that stuff. What they're saying there is that we're going into a season here where historically the next couple of months we see an increase in the job creation numbers, or initial jobless claims, I'm sorry. We see an increase in that, which is very normal. which means that won't be bad news. We know that's coming. That's already talked about. When they say the word seasonal with jobs numbers, that's their way of saying we already know they're going to go up. And so if they don't, then that's really good news. But if they do go up a little bit, then it's not a problem. So you won't find that as we go into the end of June and we start seeing these numbers creep up, you won't find that people say, oh my God, this is horrible. This is a horrible thing. And so that maybe helps you out when you get to that point. You go, jobs numbers or initial jobless claims are going up. Why is the market still doing just fine? It's a seasonal event. It's widely known that that's going to happen. Anyways, enough rambling there. Let's go on over to the markets here today. You got a higher low? Who wants to bet on a higher low, right? It's not an official higher low yet, but it's working on it there. All the bad news has been digested. Like I said, you've got 1/3 of the S&P, 1/3 of the stocks in the S&P back above their 200-day moving average, which is all the way up here for the S&P. And you've got 37% of the S&P above the 50-day. So in the mid to long term, things are recovering, at least on a small scale, a third, basically. I guess that's not small. But that's kind of news you got going on there. One small light. I'll give you one small light at the end of the tunnel, right? So if you're looking like, I need some good news here, man, give me something. One small light at the end of the tunnel. Expectations for earnings going forward just hit new highs there, right? Let's say it this way. So these are analyst estimates for forward projected earnings. So if I were to hover my little cursor over here, right here you would see, look up here, you would see, okay, this is for the third quarter of 2023. This is for the second quarter. This is for the first quarter. Here's the end of the year right there. Third quarter, and this gets us into the next quarter of this year. So we're obviously projecting forward. That's why you see the date at the bottom being into 2023. Analysts do have a habit of overshooting their estimates going forward, whether it's up or down. They did the same through COVID. And you want to see that decline there. They overshot to the downside. This is not a overshoot. We don't have a rapid expectation of forward earnings. We have a gradual increase, so it makes you think like maybe we're a little more on track here. It is pretty impressive, in my opinion, there, if you consider that. So the consensus earnings estimates are at new highs, okay, but we just flirted with a bear market, and think about all that's going on and everything. We still see slow earnings growth going forward. So for those of you that are looking for some reason to be excited, well, the majority of people that make major decisions there about individual stocks believe that growth will be slow but steady going forward. Only a small downtick there through the midterm elections as we go into the end of the year. So imagine if we get into that earnings season and earnings are flat. What if they don't pull back, right? So there's those things starting to peek their head up there. And I just thought, all right, I'll give you something. It's a small, tiny little reason why maybe the world's not ending, but that could change rapidly. Anyway, so I just want to share that with you there. Let's go over to the S&P here and take a look. As you go through some of the names today, your tech stocks, which, by the way, over half of all tech stocks in the S&P are back above their 50-day moving average. Apple is not one of them there, but it was higher today. Alphabet also moving higher. I'll point out Amazon one more time. This is that mean reversion, like Kramer or somebody said the other day. Amazon's got nowhere left to go but up. And whoever said that was right. I can't remember if it was him or not, but very nice, right? So tech stocks all making their attempt to move higher. You got Facebook moving higher. Tesla had about like 5% day. Yeah, basically a 5% day for Tesla there. So a lot of the tech space, the big stocks that moved the way, they did good today. They did very well. Visa, one of the ones that's back above the 50-day, not quite above the 200-day. MasterCard in the same camp. It's above both moving averages there. The only weakness was in the drug space. You got Eli Lilly pulling back a little bit. Amgen also pulling back a little bit, although well off of its lows. And Hormel, which is earnings related, that's the violence that you see there for Hormel. If you look at the NASDAQ, up 2.7% on the day, same thing, just continuing its little pullback there, no complaints. And I would say the same for the Russell. You kind of hope that's a new higher low for the Russell because that's been a bit rough. If you look at the Dow, it's headed back towards the 50-day as well. And Bitcoin, there's nothing going on. It was like exciting, awe, and then quiet. So there's not much to say there. If we look at oil, this is a fascinating move for oil. Overnight, the overnight electronics session, a very sharp move lower. And I'll give that a second to catch up. There we go. So very sharp move lower there. You've got two things going on. The Saudi Arabia themselves says we'll increase production by 648,000 barrels a day starting in July and August as well. They're trying to get back to the $10 million barrel area. You also had the futures roll from the futures roll is taking place. And so you tend to see a lot of activity there, a lot of buying that's kind of false because they're actually paying more to move up the contract, slightly more at the time. And so that created a little bit of stress overnight. But look what happened. It rallied back all the way and went positive, adds 2% on the day. If that's not a horrible sign for the bears or those of you that want gas prices to go down, I don't know what else you want, right? What a horrible reversal today if you're hoping for lower prices. So with that in mind, if you're looking around the markets today, you're going to see energy held up pretty good. Remember, energy itself is more extended than oil, so there could be a reason that energy pulls back, but oil continues grinding higher. And remember everything we talked about earlier this week about energy stocks and how far they've come, actually. All right, let's take a look here. You got bonds. Well, we're going to talk about bonds more. Because bonds no longer have the Fed to support them, right? So what's happened here is the Fed is in quantitative tightening mode. That's the fancy word. So in quantitative tightening mode, basically they're letting, we talked about this when they announced it, they're letting the mortgage-backed securities that are maturing, they're just letting those roll off, meaning they're saying, fine, we're not going to re-up them. We're not going to buy more to replace the ones that we had. So that's a way of them reducing their balance sheet. Well, it also means that the largest buyer in all of history is no longer buying. That will have an effect on the global money supply. It will have an effect on the economy there. Look at what, just them saying that they were going to let the mortgage-backed securities and stop buying bonds, they were going to let that stop. Just the effect of them saying that has had an impact on the bond market overall. So definitely, they call that the signaling effect, right? So just the signaling effect of them talking about it has done it. Now we're at a position where they're not physically going to be doing it anymore. So money will begin to tighten up all over the world slowly, which means rates can now be a little bit more free to move in an open market type society for the moment, right? So they could change their minds there, but that's what you have going on there. So we're going to talk a lot more about bonds because you're going to see a little bit more activity going on there. All right. So one more thing. We talked yesterday about a service-based economy there. We're at full employment. And so the argument I made yesterday was, how do you adamantly argue that the world could go into a recession when we have full employment? Certainly possible. I wouldn't say that that's not possible, but it's like, okay, you can't be doom and gloom right now with full employment. And I said, but the problem is it's a service-based economy. So that doesn't mean the economy is going to grow rapidly because you can't, right? You can't grow an economy based on service there. So checking into a hotel does not cause the economy to grow, right? The fact that you are someone that checks those people in. It is manufacturing, construction. You could argue IT, right? So what I did real quick, I'll just share this with you here. One way we can see this, if you want to see the change, let's look at job openings in construction. All right, great. That moves an economy. Information technology. All right, great. That kind of moves an economy there. Retail trade, right? Moves an economy. Look at some, let me just plot a bunch of them here. So what we're going to do is put them all on a charts here. Look at, for example, durable goods manufacturing. That moves an economy, right? Durable goods are things like washers and dryers, things that you'll have for a long time. You're going to buy a refrigerator, you're going to have it for a long time. Non-durable goods would be, apples. I don't know. Something you're going to use once or twice. Paper plates, right? You're going to throw it away when you're done. So that's that kind of thing. Leisure and hospitality. Right? Service-based business. Retail trade, service-based business. Information tech, okay, that can grow an economy. Construction can grow an economy. You see the difference there? Everything service-based has tons of jobs open and available right now. We want to service you. We want to be a part of this. There are job openings increasing for what would be in the manufacturing side of things, but notice the disconnect there? That's one way you can see we are a service-based economy. You want these lines to be above these lines. That's how you would know we're going to have, they're not going to be above those lines, but that's how you would know, oh man, this is a fully economy that can grow consistently. We've got good jobs. We've got good manufacturing. That's the opposite right now of what you want to see. So that's how you can actually look at the difference between them. Thought maybe that was interesting. It's a little bit off topic there. I don't know. Maybe that's something you care to look at there. I'm not going to do the new highs and new lows today because there were 2 and 2. That was it. That's where we're at with the market. There are no real new lows that are really meaningful in any way, and there are really no new highs. Think about where we're at. We just came off of 52-week lows, almost the entire market, but we've not back to 52-week highs. So stocks are sort of, sloshing around right there in the middle. So there's no need to even cover that. So we'll make this one short for you here today. We'll go to stocks in the news. If you have questions, feel free to type them out. I will try to do my best to answer them. Here's a fun stock, and it happens to be their ticker symbol as well. Cedar Fair. They own Cedar Point. I can't think of the other one. King's Dominion, is it? They own a bunch of different theme parks that are not like Disney size, but still really cool places that focus on roller coasters. Anyways, they came out and said, hey, Memorial Day revenue for them increased 21% relative to 2019. Remember, that's what we're focused on. We don't care about 2020. We don't care about 2021. We want to see, are you coming back relative to pre-COVID? And they had a lot of good things to say there, so maybe putting in a little bit of a low for them. And also, it's their season as well. Chewy.com, earnings better than expected, guidance better than expected. I don't have anything else. There's no need to go into details here. Everything was really good for them. That helped them gain 24%, even though that's a blip on the screen. So if you're not familiar with candlesticks, that's today, and that's a 24% move in one day. Doesn't really do much for you now, does it? But nonetheless, that was really good, actually, for them. Chipotle's in the news there. If you like Chipotle, do you know this, Cody? Chipotle's gonna let you use Bitcoin and other cryptocurrencies to buy the food. That's something, huh? There could be a day. That's true. There could be a day where your bowl is much cheaper than the next day. More expensive, yeah. I continue to make that argument that until crypto volatility, which it's trying to, actually subdues itself a little bit, what's the point of using that as a currency? And the second and larger reason is you're going to be taxed to buy the food, and then you're going to be taxed for using your currency. It's a horrible, horrible, horrible currency. Anyways, Chipotle's saying, we're in. Let's give it a shot here. Maybe they'll have a Chipotle coin. It was not bad, right? Chipotle coin came with it today. GameStop, they lose a bunch of money, but the stock was higher. I don't know what else to tell you. Hormel, that was earnings related here today, and everything was good with them. I didn't catch anything bad there. Earnings came in better than expected. 48 cents versus 44 expected there. Guidance going forward was good. Costs are an issue, right? A little bit there for them, but that wasn't anything new that came out. So I'm not sure why they got dinged so much today. But if you like the boring stocks when they pull back, that's one to take a look at. And tomorrow, you have no earnings to report. You have a handful of Fed members coming out and speaking, and they have been doing that every day. So they're drowning out everything. The focus is going to be on the unemployment rate. So we're looking for private payroll jobs of 300,000. I don't know about that now after what we saw today. 3.5% unemployment rate. Average hourly earnings should be up about 0.5%, give or take a tick. And we'll see there. The average hourlies worked should go up, I believe, 0.1% as well, 34.6, 34.7, somewhere in there. Those are the numbers that will be focused on before the market opens tomorrow. And I'll take your questions if you happen to have any. And we'll call it a day here. I can go have my pizza. Yeah. Not every job in existence is meant to be a career. Amen. And also, not every job requires college, right? Like, we got to get back to more, hey, mister, you don't have to go to college. You could learn a trade. You're actually really good at it. Like, until that happens, this only gets worse, But nope, that's not on the agenda for the moment there. So that's what it is. Is Walmart a buy? Ooh, you like that Walmart there? So right now, everybody's well, here you go. Everybody looks at Walmart and says, all right, we see what you did. You kept your prices low, and that cost you big time, right? That's what their last earnings report basically said. And now we're going, did it cost you too much, right? Is this actually a genius idea? We talked about this on the day after they reported earnings, saying, is that not genius? They're saying we're going to keep our prices low and we'll take the hit right now because it's going to bring the volume. And of course, they can handle the volume. So now that's starting to get out into the news like, wait a minute, maybe Walmart wasn't so stupid for not raising prices because sales are coming in more. Average cost per ticket's coming in more. So that's what's leading to this. And I would say, that's probably a smart assumption to make there. Probably a smart assumption to make. Hey, Dustin, a 30-year-old, what do you think of having VOOG in a taxable account instead of VOO to account for more growth? So, all right, so anytime you come across these types of ETFs, they're not meant for holding. VOO is. VOOG is a little bit more complicated. So for me, I would go with, think about this. I'll use the leveraged ETF example. So you've got an ETF that tracks something, and then you have a leveraged ETF that tracks twice of that something, right? So it's supposed to move a little bit more. So why not just buy more of this one? Why buy this one, right? There's a lot of extra volatility. There's a lot of extra, and it's minor with Vanguard, but a little extra cost in there. So for me, I would say the VOO is great. Use that, but maybe just buy more than you would by using the VOOG, if that's helpful. Maybe a horrible explanation, but there you go. Yeah, there you go. Which full-time jobs shouldn't support a livable wage? Think about that, man. I mean, it's like, even the job I had. What was the job? My first job made $5.15 an hour, and that was a lot, by the way. I'll never forget that. That was my first full-time, or not full-time job, but my first job as a kid. And I just prepped food for the cook. Now, the cook, that was his full-time job. He almost ran the place. He was a really good cook. But should I still be there doing that? Prepping food? No, maybe I want to step up and be a cook. Like, where's the motivation there? So I think there's some of that missing there. It's not for everybody, but yeah. I sort of disagree with the colleges for, hey, everybody, go to college, right? There are people currently working at my house that they're the one dude. It's the one guy that can do this in this entire area. And I live in Tampa. So it's not like we're some small town somewhere. It's the one guy that knows carpentry that well that can do it. That's it. Like, think of the money that guy's making, right? Anyways, gonna grind to retire, man. I like that name. Yeah. Subway's 18 to 20 bucks an hour. I mean, maybe at those prices, maybe it's worth, maybe that is a full-time. They're coming with insurance and stuff too. Jeez. Yeah. Like in your Whirlpool, man. Gotcha. Especially if we don't fall into any kind of recession. The housing market just kind of has what they would call a soft landing. You might be onto something there. Yeah. Would you buy bond ETFs until the market settles? What are my other choices? No. So me personally, knowing everything is available, no, I wouldn't buy bond ETFs. And then why are you saying I had something and it fell? I'm worried about volatility, so let me go over to bond ETFs until things settle. I would absolutely not do that. No. Yep. Well, we see where everybody stands on their views in here. That wasn't hard to do. JW, you think the service economy makes U.S. stock market less attractive than emerging markets, or do U.S. companies still capture all that growth outside the USA? A lot of our U.S. companies are, we just talked about it yesterday. So a lot of our U.S. companies are seeing that growth overseas, which is great news, right? Because if there's this concern about the U.S. economy and what may happen, it doesn't mean it doesn't bleed over to everybody else, but you're like, oh, great. Okay, good. Go make your sales over there where everything's strong. You see Brazil? Holy crap, right? Holy crap. Oh, you can see Louis. Yeah, he's looking all right. He's a little gray in there. Right? He had some chips along the way, but he's making it. You liked the video earlier today? Thank you so much. I liked it too. How much risk should you take, right? Think about that. The savings rate. What did I say? I said, yeah, like what should it be? Like, the savings rate kills me. It's cool to talk about, but it kills me that they want that, special number, 10% or whatever it is. It's weird. Got spam in there somewhere? Yeah. Ooh, Giovanni, man, you want your arc to reverse? I want it to reverse for you, man. That's gonna be a tough one. So the trouble here, I think, just this is total opinion, so I got no stats for you or anything, but the trouble here is everyone that invested in this over here was kind of like a rookie investor. They bought into the hype, right? And that's a lesson learned. Fine, it doesn't matter. You're not a bad person for that. But you're now staring at this. You've lost 300% the value. You go, well, if I can get back to 60, I'm out. Right? Think of all the emotion that's built into this. So I don't like the hype stuff, man. Because when that starts to fall, all the rookie type investors, they'll hold and they'll take a smaller loss. Well, what does that mean? Selling pressure. Every time this sucker's going to try to bounce, people are going to be piling out of it. That was big money that went into this back during the hype there. Yeah. So, all right. Anyways, I guess I'm going to have pizza for the missus' birthday there. I wish you guys a great rest of your day. Enjoy your weekend, by the way. Not a long weekend, but enjoy your weekend there. It was a short week. And thanks for watching. See you later.